Hello to those of you who have a 520 credit score or right about 520. In this video, we're going to talk about how you can get approved for a mortgage with your 520 credit score. We're going to review all of the different mortgage programs that may be available to you and talk about what lender overlays are and how that would impact you, compensating factors and how they could benefit you, and then tell you how you can get pre-approved so you can move ahead with your purchase despite having a 520 credit score. So if you just stay with me, we'll get into the details right now. The first mortgage program we're going to talk about is conventional, and unfortunately the credit score minimums for conventional loans are 620, and with your scores as low as they are right now, you're not going to be able to qualify for a conventional loan. Now, if you'd like to work on your scores, we can help you with that. We're not licensed credit repair company, but our loan officers have extensive experience in dealing with individuals with low credit, and they can let you know which items maybe to pay off, which ones not to, and not only to help with your credit scores, but also to help get you approved for your mortgage. So conventional is likely out of the question for you at the moment until you can raise your credit. But again, there are other options for you. So right now, with where your scores are at, you're looking at an FHA loan. FHA guidelines allow for credit scores as low as 500. However, when your scores are below 580, the down payment is 10%. Conversely, if you can get your credit scores over 580, then you've got a 3.5% down payment. So if you're near 580, we could probably do a couple things with you to help bump it up, so that way you can qualify for the 3.5% down. FHA loans are one of the most popular loans, especially for first-time home buyers. As you can tell, they're flexible as it relates to credit, and you can stretch your income a bit too, because the DTI, the debt to income ratio, limits are higher than they are for conventional loans. The next program we're going to talk about are VA loans. These are for veterans, active military, spouses of veterans. Anyone with VA eligibility can qualify for a VA loan. Now, the interesting thing when it comes to credit scores for VA loans is that the VA has not come out with a specific credit score minimum. It's really up to the lender's discretion. Now, what you will find is that lenders, and I'm going to get to this later in the overlay section, but many lenders will not go that low. What I can tell you is the credit score should not stop you from getting a VA loan. If you're below 500, then you're probably going to have a very difficult chance. However, if you've got credit score in the 500s, you should still be able to get a VA loan. The next program we're going to talk about are USDA loans. So for USDA loans, there is also no minimum credit score requirement. Lenders will have their own minimums that they will put in their own guidelines. And if you've got credit score in the 500s, you should theoretically be able to find a USDA loan with those low scores. However, there are very few lenders right now who are offering USDA loans with scores that low, especially with a zero down payment program like that. So with USDA loans, you've got a maximum income amount that you're allowed to make, and it's set by county. And within our USDA article page that we talk in depth about USDA loans, we also provide a link to where you can see what the income limits are. But a USDA loan is possible if you have lower credit. Next, we're going to talk about subprime or non-prime loans. We do receive a lot of calls from people who are looking for a subprime mortgage, and subprime is a broad topic or broad category where a lot of different types of loans or reasons for, that would put someone in the subprime category fall within. People call us just because they have a low credit and they think they need subprime, and we just talk to them about FHA loans instead of just a subprime mortgage. But Subprime also includes individuals that may have a recent bankruptcy that do not meet the FHA conventional USDA or VA guidelines based on the waiting period. So let's say you just got discharged from a Chapter 7 recently, or maybe you've got a foreclosure on your prior home that was less than a year ago. That would put you into the subprime loan category. There are subprime loans available with lower scores. However, keep in mind your down payment is going to be much higher. You could be looking at anywhere from 25 to 30 to 40% down. But if you have a recent Chapter 13, we can help you with an FHA loan with a recent Chapter 13. Either way, give us a call and we can talk about whether you need a subprime loan or one of the other programs. So I touched briefly on lender overlays, and what those are self-imposed stricter requirements against the existing mortgage programs that are out there. So for example, we talked about FHA loans and how you can get an FHA loan with credit scores as low as 500. Many lenders out there will not go that low. Many lenders will not even go to 580. Your local banks may not even go below 660, for example. Those are lender overlays. Other lender overlays could be they may cap the debt to income ratio ceiling a lot lower than what the guidelines allow for. There are all kinds of different overlays that could exist. So if you're talking to a lender or your local bank and they're telling you that you cannot get approved because of X, Y, and Z, we recommend you contact us because we may find that there are ways to get you approved. It's just that that particular lender you are working with happens to have their own overlays. Next, we're going to talk about compensating factors, and these things can definitely help you to get approved when you are borderline or when you have lower credit like you do. So one of the things that helps when it comes to compensating factors would be a high income, more income than what is needed, or which also translates into a lower debt to income ratio. So that would be a great compensating factor. Another one would be job stability and job history, whether or not you've been in the current role for a long time or at least the same industry, you've got a proven track record, you haven't lost your job in a very long time, and the lender would feel very comfortable in loaning to you because they know that the income will continue to come in. Another compensating factor would be high cash reserves. So let's say you've got a 3.5% down or 10% down requirement for FHA or 0 down for VA or USDA, but you happen to have a lot of money still in the bank, a lot of reserves, meaning you've got 6 months or a year's worth of payments in your reserves in your bank account. That's a positive compensating factor that would be in your favor. So those are just a few to mention at this point when it comes to compensating factors. One last one I'll say is low payment shock. Payment shock is when a lender sees you currently have a rent payment or a mortgage payment that is, let's say, $1,500 a month, and now your proposed mortgage payments with principal, interest, taxes, and insurance could be $3,000 a month. It's double, and that's viewed as payment shock, where it's a huge increase in your monthly housing payment. That's viewed as a negative. However, if you got very low payment shock, then that would be viewed as a positive, meaning if your current housing expense per month is the same as what you're looking to get into with the new mortgage, then that would be viewed as a positive compensating factor. Okay? So in the end, it's definitely possible with your credit scores to get a mortgage. We encourage you to reach out to us at nonprimelenders.com. I'm going to link in the description to the webpage where you can find us. And we're always available 7 days a week to speak with you. I appreciate you watching today, everyone, and we do hope you have a great day.